สวัสดีค่ะ A very good afternoon, executives, distinguished guests, ladies and gentlemen, and welcome to SCBX Strategy Day 2022, 3Q 2022 Analyst Meeting. Now, I'm Vinarat Lauha-Phakakul, and I'm very pleased to be your MC today. We are now in the final quarter of the year 2022. And as we all know, 2022 has seen many challenges that impact the global economy and business as well. So what is SCBX path from here on? We'll be hearing from 3 executives today from SCBX, and after that, they will be answering any questions that you might have. But first of all, let me introduce the executives to you. Our first executive here today is Kun Manop Sangyambut, Chief Finance and Strategy Officer, SCBX. Our second executive is Dr. Sompravin Manprasert, Chief Economist and Chief Strategy Officer, SCBX. And our third executive with us is Mom Luang Jiradet Jakapan, Chief Credit Officer, SCBX. And apart from the 3 executives just now, we also have other senior executives joining us today via Zoom online. May I introduce to you Kun Krit Jantanotok, CEO of Siam Commercial Bank. And along with Kun Krit are 8 other executives from Siam Commercial Bank joining us through Zoom online as well. So let's start with the big picture. Let's first of all get a macro picture, macroeconomic update from Dr. Sompravin. Dr. Sompravin, please give us the detail.
Thank you ครับขอบคุณครับคุณวินารัตน์ Good afternoon. And since our last meet in July, things has actually developed in the direction that we have expected. Yet it's faster and larger degree. And facing with this inflationary pressure, central banks around the world actually ramp up its policy tightening quickly, leading by US, EU, and UK. And they are now accept more economic slowdown to compensate for inflation. And when you look inside Thai economy, things turn brighter from opening up tourist-related industry. Tourist arrival seems to be at forefront and consistently beat our projection all along. And in any case, our main message is clear. The economy is recovering amidst challenging environment, high inflation, global slowdown, and geopolitical uncertainty. Although numbers will be improved gradually, we acknowledge this downside risk and we remain cautious. So let me walk you through this a bit. When we look at the global economy, first the main issue is inflation. And we feel that inflation will remain elevated above monetary policy target in the next year or 2. There are several reasons, as we all know. Both supply and demand play along. And actually, that's give a reason to believe that central banks around the world will still keep hiking the rate for another year or so as well. So then it will lead to the next thing, that is the economic slowdown. There are more and more evidence that recession is around the corner, possibly next year. On the left-hand side, as you can see, the comparison of the current situation on the red line, and the purple line, that's historical data ranging from a couple of back years. This chart developed by the World Bank, and we can see clearly that we are heading towards a recession. And in fact, if you look at the magnitude, it's not a soft landing one. And on the right-hand side, if you look at the soft data, the keyword search on Google on recession word, actually is running very high. It's similar to subprime crisis 20 years ago. When we look inside, the Thai economy still expand from opening up service-related industries. Tourist arrival should reach 10.3 million this year, and a whopping number of 28.3 million next year. We are very optimistic about the industry. Yet, we also see a soften in other areas, such as export, private investment, and also private consumption. On the right-hand side, that's the path of the recovery of Thai GDP. The level of GDP will reach pre-COVID level by second half of next year, but it will take another 2 years for Thai economy to go back at its potential trend. Let me skip some slide. Okay. So let me highlight about the tourism. It's not only foreign tourists that will play important role. It's actually domestic travelers too. On the right-hand side chart, we see that domestic trips should reach up around 88% this year. And by next year, we will be at the pre-COVID level. Consequently, it's labor intensive, so labor market will improve continuously. But again, it's not back at pre-COVID level yet. But there is a but. Having high living costs, high household debt, private consumption will still be constrained going forward. For the inflation on the right-hand side, we believe similar to markets that inflation has peaked, but it will decline very, very gradually. EIC is still looking at higher than inflation target in the next year. We're looking at 2.3 average inflation next year. Let me touch a bit upon the flood issue. Our analysts expect that the loss is not as large as previous flood, and the loss will concentrate on rice, and the total cost to the economy is around 12 billion baht, and that's account for only 0.07% of the GDP. So, and our disk protection is already account for this damage. The last issue is about the rates. Since inflation will remain elevated along the global slowdown, the rate hike will be very gradual. We expect to see another rate hike by the end of this year and another 325 basis point rate hike next year. So by the end of next year, the rate will be stand at 2%. Last is about baht. As we all know that baht has been depreciated, but coming flows of tourist arrival will add on current account surplus by the end of this year, and we expect to see a positive current account next year at 1.5% of GDP, and that's why we feel that baht should gradually appreciate towards 36, 37 by the end of this year, and 34, 35 by the end of next year. That's all from EIC ครับ Thank you.
Thank you very much, Dr. Sompravin. That is the big picture of Thailand. We'll now scope down a bit to the business side of things. So we'll be listening to Kun Manop. He will tell us about the business results of the third quarter.
Thank you, and good afternoon, ladies and gentlemen, for joining us today. I'm very happy to see you for this quarterly results briefing. And for those of you who joined us in the earlier session on Strategy Day, we do appreciate your continued support to us. So for this quarter results, let me first give you a quick update on group restructuring. Very quickly, right now we have already transacted the business transfer for totally 12 companies from the bank to SCBX. And the next one, and also the final one, would be the transfer of business or assets from the bank to Cardex. which is expected to be complete by 4Q of this year. So by the end of this year, we should be all complete in terms of business transfer and asset transfer. With the payment of special dividend from SCB Bank to SCBX, 61 billion baht, the capital position for the bank is dropping to around 15% for CET1 ratio and 16% for total capital ratio. However, the overall capital position for the group SCBX is essentially unchanged, very healthy and very solid, 17% for CET1 and almost 19% for total capital ratio. And in terms of the capital position for the bank, we intend to maintain 15% CET1 for the bank to make sure that the bank will continue to have a good capital buffer for the future uncertainties. So this is the group structure after all of the business transfers. So we highlighted in our strategy briefing that the strategy going forward will unfold in 3 phases. We will execute our growth strategy with prudence and discipline. And for those of you who missed the session, can also look at our webcast replay after this. In terms of the business highlight for 3Q, the core banking business continue to be quite solid. NIM continue to expand, and we are very pleased to see fee income to rebound on a quarter-to-quarter basis across the board. And we continue to exercise disciplined cost control at the bank. And for this quarter, we see a meaningful decline in NPLs, and our coverage has increased to above 160%. In terms of the new growth businesses, we see a strong takeoff in auto title loan business, AutoX, and we are very encouraged to see these results, given the fact that they have very good fast execution, and within the first few months of the business launch, they already booked or ramp up the loan to more than 3 billion baht. InnovestX has announced a rebranding strategy formerly known as SCB Securities, and they have launched Thailand's first ever investment super app that encompasses both traditional assets and also digital assets. So we believe we will have a unique advantage in this space going forward. Robinhood has basically become a lifestyle super application, so including not only just food delivery, but also travel, mart, and express verticals. And Robinhood just secured a ride-hailing license, so which will be the next growth phase for the company in terms of monetization. In terms of digital adoption for the whole group, the growth momentum in digital users and digital revenue continue to be very strong. And for this quarter, we see digital revenue has edged up to about 5%. In the previous 2 quarters, the average was around 4%. So we did some improvement, even though the progress has been quite slow. But certainly, over the next few years, we expect the digital revenue to rise dramatically to about 1/3 for the whole group, with about 20 to 25% for the bank, and much higher contribution from the Gen 2 and Gen 3 businesses. The next 2 pages will give us a quick update on the businesses of the subsidiaries under Gen 2 and Gen 3. What I want to highlight for Gen 2 is for AutoX businesses. Right now, they have already opened the branches, more than 900 branches, and the loan booking over 3 billion baht. They have employed a salesperson, over 1,600 salespersons, and the majority, actually more than half of them, would be equipped with insurance license. So we are seeing a good start for this business. Cardex should follow very soon after the asset transfer by the end of this quarter. And Monix and Abacus continue to be on a good growth basis. They have managed to bring down their NPL level to around 1% and below with effective NPL management. In terms of the Gen 3 business, InnovestX, after the launch of the investment super app, we have some good momentum in terms of app downloads and number of users. It's still early. We just launched the app a few weeks ago, but we certainly should expect good growth in this area going forward. For SCB 10X, for this quarter, we give a breakdown of our investment, our VC investment portfolio. So you can see that it is a rather well-balanced startup investment, not only in digital asset and also lifestyle ecosystem, fintech businesses, and a good chunk in the fund of fund business. And lately, also we invested in some of the robotics startups. So altogether, we believe this is a good balance of the business. In terms of business going forward for SCB 10X, they will transform themselves from a corporate VC fund model into a GP fund model. So that will be a new growth catalyst for 10X over the medium terms. However, for this quarter in particular, what I want to highlight is that you may notice that the fair value dropped from around $500 million to about $465 million. So we suffered some mark-to-market decline in the third quarter. But still, overall return on the overall portfolio is still quite solid, well above 20% IRR. But it's just that because of the capital market volatility brought down some of our fair value for the whole portfolio. Robinhood continued to be quite strong, 3.3 million registered users. You may have noticed that the increase in the number of users has somewhat plateauing. That's by design. We basically maintain our promotion expenses and try to test the market. And what we found out is that even though we maintain rather than increasing our promotion expenses, the GMV and the number of transactions per day has been quite steady. And in fact, still register some growth. So this basically has shown to us that Robinhood as a platform has created a very good customer stickiness to our platform. The GMV for the first 9 months was around 7 billion baht, an increase of more than two times from the past year. As I highlighted in the previous session, the strategy session, we certainly expect to build the GMV value to more than tripling to about 30 billion baht in the next 3 years. Revenue momentum is still very small, but nonetheless, we are starting to do some monetization. In the next 3 years, we expect the revenue to reach 4 billion baht. And when we talk about the 4 billion baht revenue expectation in the next 3 years, we only include the existing ecosystem, which is the lifestyle ecosystem. If you have to add the new growth initiative, for example, ride-hailing business and also the EV subscription business, so we certainly expect revenue to be greater than 4 billion baht. So we should expect the Robinhood platform to be on the path to a break-even, operating profit break-even by the year 2026. In this quarter, we provide a more breakdown details of the revenue and net profit by Gen 1, Gen 2, and Gen 3. Obviously, in terms of the revenue contribution, Gen 2 and Gen 3 right now made up about 18%. But for net profit contribution, it is still very small. And that is exactly why we believe that the new business structure, the right governance and incentive structure would build the base for us to build Gen 2 and Gen 3 going forward. Right now, on the combined basis, Gen 2 and Gen 3 made up about only 3%. We certainly expect the contribution to be much greater, and over the next 3 to 5 years, the Gen 2 and Gen 3 contribution should be at least 1/3 of the business. Now, let's move to earnings and P&L items in our 3Q results. NAI continue to be very strong, and I will go into more details about that. And fee incomes also very positive. Investment income nonetheless suffered a decline from the previous year under the current market environment. And for this quarter in particular, we separate the investment income from the fee income so that we can have a clearer picture of the business within the SCBX group. For us, we believe that investment income will be the main growth driver for the group over the next few years. Expenses gone up quite a bit, 7% year on year in absolute terms, but the cost to income ratio, our cost structure, is still well within our expectation of low to mid 40s. Credit cost has declined to a more normalized level for this quarter at about 1.3%. Basically, we did some precautionary buffer in the first half of the year, and this quarter we believe that it can be more normalized at 1.3%. So the operating profit remained quite resilient, up 8% year on year, and net profit up 17% year on year. And as I mentioned earlier on, NPL ratio declined to about 3.3%, and we have higher coverage over 160%. So let me skip to the breakdown of the revenue. For this, I want to highlight that NAI fee income, I can discuss in more detail for these two components, but let me spend a few seconds to discuss investment income and trading income. You know, investment income and trading income combined basically consists of investment income from SCB 10X portfolio mainly, and also a little bit from the trading activities and also investment portfolio within the bank. So altogether, it came down to only about 300 million baht in the third quarter. So we have some mark-to-market loss, also mark-to-market gain still, but on a total basis, including trading gain from the banking business, we had about 300 million baht of revenue for the third quarter. Obviously, this level was significantly lower from the previous levels that we witnessed in the previous few quarters. But nonetheless, we believe that our overall business remains quite healthy, and this basically makes up a very small proportion of our total revenue pie. Cost to income ratio edged up a little bit to 43%, and I believe we have done lots of work to control our cost. Otherwise, it would have been higher than this with additional costs coming in from the restructuring of the group business. Overall, you know, on a combined basis, 9 months is still well within the CI ratio that we expect. Some cost increase in employee expenses because we had some one-off expenses in this area because we adjust some for the base to make up for inflation pressure, but that's only one-off for the junior staffs of the bank. But nonetheless, the other cost items remain quite well within expectation. I mentioned in the previous quarter that the overall one-off cost items because of the SCBX group restructuring would range from 2 to 3 billion baht. It is still well within this range, and some of these costs, actually most of these costs, have been incurred already in the first 9 months of the year. So there will be some additional costs to come in the fourth quarter. But at this point in time, we can be quite certain that overall cost to income ratio will be below the mid-40s range that we discussed. Can someone help with the page turning? Now, on the segment performance, overall loan growth on a Q-on-Q basis, essentially roughly about flat to small decline, and on a year-on-year basis, roughly about 3%. And we see, in terms of the quarter-on-quarter basis, retail growth registered about 2%, but then the non-retail segment registered a small decline. Basically, as we have always mentioned, we are trying to optimize our loan portfolio and also to optimize our risk-weighted assets, and we will grow in line with the macro environment. And right now, we probably will not be too aggressive in terms of growing our loan book. But what we have experienced in terms of positive momentum is loan yield and NIM. We have yield on loans improving about 19 basis points on a quarter-to-quarter basis. Now, average loan yield was more than 5%, and the NIM improvement was around 21 basis points, rising to around 3.38% NIM. So this is positive for us. What I want to highlight is that in the past 2 quarters, it has been because of the fact that we have lower incremental debt restructuring and also pricing discipline that has contributed to the NIM and yield improvement. For the third quarter, the fact that we had 2 rate hikes from the Bank of Thailand also helped push the NIM and yields up further. And we certainly continue to see some positive NIM momentum over the next few quarters. On the right-hand side of this chart, we would like to give you our analysis of NIM sensitivity to interest rate increase. In this slide, you can see the asset breakdown and also liability breakdown. Our internal model suggests that for every 1% of policy rate increase, the impact to the first full year NIM improvement is around 25 to 30 basis points. And this is based on a full pass-through in our floating rates of our loan book. But then the deposit rate adjustment, in particular the CASA, will be quite dynamic. And this is also based on our internal behavioral model. So certainly that is the room that we can adjust. I can share with you that our last rate adjustment, which is based on a partial pass-through, the rate hikes twice that we had this year should result in around 10 to 15 basis point of NIM expansion. So I think this is very much in line with the analysis here, because the last 2 rate hikes was only half a percentage point, and we should expect 10 to 15 basis point NIM expansion. I mean, this is an impact on the first full year basis, and once loans get repriced down the road, then there should be still more positive NIM impact, NIM expansion to flow through in the following years. This analysis, though, doesn't include the fact that we're going to have FIDF fee increase starting in the first month of next year. The FIDF fee rate increase should mean around 20 basis point of NIM decline. So I think there could be some offsetting impact in the next year in terms of the NIM expansion. But then the positive impact will be fully realized in the following years, the year 2024. On the left-hand side of this chart, we continue to show you the cash payment of our customers. This is the cash payment for the entire bank of the overall portfolio, both our normal portfolio and also our restructured and the blue scheme portfolios. It has been quite stable in the third quarter versus second quarter. In percentage terms, it softened a little bit, but nonetheless stay at a rather healthy level. So that's why we continue to see some positive NIM momentum, and that means that the cash flow for us remain quite positive, and it allowed us to be quite constructive in terms of EAR recognition. We will continue to monitor this data point very closely. As Dr. Sompravin mentioned early on, while we have a good recovery in the business momentum so far in terms of the macro outlook, and we are quite positive about the tourism industry. We expect the inbound number of tourists to almost triple to 28 million people next year, which should help our customers in our portfolio, given our sheer size of the customers mix in the to the hotel segment. But we'll be mindful of the other risk factors, geopolitical risks and inflationary pressure, and so on and so forth. The yield on loan improvement across all segments. Corporate loan yield up 16 basis points on a Q-on-Q basis, both coming from pricing discipline and also the fact that we have lower debt restructuring in the corporate segment. SME, more or less similar factor, but on top of that, for SME segment, we have soft loan program declining in the third quarter, continue to decline in the third quarter, and that has helped with the average loan yield for SME. And our strategy also trying to go for the good segment in the smaller SME segment, and that has helped in terms of the yield mix for the overall SME portfolio. Retail segment has been somewhat stabilized, up 9 basis points on a Q-on-Q basis. And when we look at on the right-hand side of the chart, auto and housing yields are somewhat stable because of the fixed rate natures of the business, so didn't get so much benefit from the rate hikes. But we try to have been able to manage a steady yields for the unsecured business portfolio. One thing that I want to highlight in this quarter is that we have managed our NPL down quite substantially. We had good NPL sales, both on the retail segment, but more prominently in the corporate NPL management. Our NPL ratio dropped to 3.3% versus almost 3.6% in the previous quarter. And our NPL coverage has gone up to above 160%. Within the NPL mix, which is right now 92 billion baht, right now we have more than half of that numbers coming from qualitative assessment. And as we go down in the next few quarters, we will try to assess the need to keep that in our qualitative bucket. There may be some customers who continue to perform quite well, and that's a chance for us to write them back or move them back to stage 2. So this is the dynamic management that we are trying to observe. On the positive note, the blue scheme restructuring edged up only a little bit from 260 billion baht to 277 billion baht. And this is a reflection of the continued improvement in the business environment domestically. So some of the customers whom we believe require a deep and long restructuring may no longer need such a deep restructuring or support from us. Again, we will continue to be quite dynamic in terms of supporting our customers should that be the need, and we see the ability for them to recover at the end of the day. In terms of the fee income, we see a sequential recovery across the board. Bank assurance business, remember, bank assurance business had been quite stable at around 3.7, 3.8 billion baht per quarter. And in the second quarter, we were a little bit concerned about the consumer sentiment, and the bank assurance may come under pressure in the third quarter. But it turned out that with our strategy to improve the product mix and also improve our sales efficiencies, we have managed to grow the bank assurance revenue by 4%. So it had a revenue of 4 billion baht in the third quarter. And we are very pleased to see a recovery in the wealth management revenue to 2 billion baht or 14% Q-on-Q growth rate after falling for the past 2 quarters. What we had done in the wealth management segment is that we improve the product mix by offering low risk products to our customers and also improve digital sales, digital channels in the wealth management to cater to enthusiast retail investors who are also a big part of our customer base. So by offering more better product mix in the low risk segments, even though our percent fee income is coming down, but then that was more than offset by a larger volume. And the net impact is we have a growth recovery in the wealth management. One other point that I want to point out in this quarter is that lending related fee also gone up 18%, which is a positive thing for us because we had been tightening our loan pricing, not only in terms of interest rate, but also loan fee. So this is something that we believe we will continue to do. We will continue to ensure this momentum to be on a sustainable path. Transactional fee more or less stabilized compared with the previous quarter, up only about 4 to 5%. But that's also a reflection of the overall activity recovery in the domestic economy. So lastly, so far on a 9-month basis, our key parameters still were within expectation with our guidance that we gave in the second quarter of this year. So we will continue to make sure that we deliver the results that we promise for the full year. Thank you for your time.
Thank you very much, Khun Manop. So now it's time to open up the floor for any questions that you might have. You can either ask the question yourself by pressing the raise hand button, and then we'll call out your name, and then you can ask the question yourself, or you can type in your questions into the chat box, and then I'll read out the questions on your behalf, okay? I really encourage you to ask a lot of questions because the executives are here to answer your questions. So just please feel free to raise your hand and ask your question, or just type into the chat box, okay? So we'll start with the first question here from Khun Trin. From Yuanta. The question is, what is the rise in tax expense in 3Q account for?
The tax expense increase in the third quarter was because of the business transfer from SCB Bank to SCBX, where the bank registered some transfer gain from the business because of the book value has gone up. The asset value has gone up more than the book value. So there was a little bit of tax burden leakage from the group. We had highlighted this point before, that the overall tax expenses from the business transfer would be around 2.5 to 3 billion baht. And this is still very much within the expected range.
Thank you very much. Okay, so we'll move on to the next question that I have here from Khun Thanawat Tisco. And the question is, could you please share more details about the slowdown in FVTPL to 1.7 billion baht? Is there any notable losses? If there is, what kind of investments? Equity or fixed income, local or regional, or what?
It's the decline in the FV2P&L in our P&L in the third quarter was mainly coming from our investment portfolio through SCB 10X. So as you know, we invest in startup businesses, and the capital market environment hasn't been too conducive for fundraisings in the third quarter. And some of the startups that we invest had a mark-to-market loss in the quarter. But we also had quite a number of deals that also have some mark-to-market gain. The overall portfolio still give us a good investment return. It's just some quarter-to-quarter fluctuation, and I think this is not a major concern for us, given our exposure to the investment in this area is still quite limited. We only allocated a small investment book to this space. The overall book on the investment AUM is less than $500 million.
All right, the next question is from Kun Virapat CLSA. Kun Virapat will ask the question, so please.
I have few questions. The first one, can you please explain more about the yield enhancement on loan, given that Bank of Thailand just hiked the policy rate in August and end of September, and Bank SCB raised the lending rate toward end of September. How come that yield on loans enhanced for the full quarter in the third quarter? And my second question is about the credit cost. Understand that 9-month credit cost came in around 153 basis points compared with the full year target at 145 basis points. Do you see any concern that SCB will have to spend such credit cost into fourth quarter? So that's all from me.
Yes, on yield enhancement, there are multiple factors for our yield enhancement, not only just because of the policy rate increases. We had been highlighting that our pricing discipline and also the fact that for this year, since the first quarter, we had a lot lower debt restructuring from our customers because of the overall economic activities recovery throughout the year, and that has helped with our yield on the overall portfolio. Now, we had an added positive momentum from policy rate hikes in the third quarter. For the first rate hike, we didn't adjust any interest rate for our customers, but still we had a good portion of our loan book in the market-based interest rates, and also our liquid portfolio is sizable, about 1/3 of our total asset. So these two portions instantly benefit from the overall rate increases. So we have been actively deploying our excess liquidity to tap into the market in order to enhance our yield on assets, and we have been able to do that quite meaningfully contribution to our NII. So I think that's to answer your question. Now, going forward, it will be quite dynamic process. On the one hand, for further rate hikes, we probably will adjust our in-base rates. The last adjustment was only partial pass-through. We'll be mindful about the customer's ability to absorb any rate hikes. After all, we have been trying to support our customer through this crisis, and we still want our customers to survive. But at the same time, we will manage overall NIM or yield expansion through the deposit cost. As I mentioned early on, that the CASA or deposit interest rate adjustment will be very dynamic. This is based on our model on the customer's behavior model, and we certainly see room to effectively manage this cost, because we right now had about 80% of our deposit base based on CASA deposit. Now, on your second question, credit cost. So basically, our guidance reflects that the fact that if we continue to book credit cost at the same level as we had in the third quarter, then it will average to be our full year guidance. Obviously, credit cost is a dynamic process. It is both consists of our risk model calibration and also our forward-looking model in terms of to take into account macro risk, and also not only just the domestic risks but also geopolitical risks in the future. it is a dynamic process. But right now, what I can say is that we have quite a lot of buffer already, in our loan loss provision on our balance sheet. A good portion is in the management overlay, which is basically something that we have put in to buffer or to cushion against uncertainties in the future. This is something that we'll need to monitor quite closely.
Thank you. The next question is from Kun Peach from UBS. So please ask the question, Kun Peach.
Thank you very much. I have two questions. The first one, Kun Manu already explained about the overall asset improvement from the liquid assets, but I'm still a bit wondering about the loan yield of bank and other bank as well is coincidentally improved a lot, although benchmark rate has not yet risen during the third quarter. Is this still the same reason from the customer exit debt relief scheme and we continue to command higher price or not? Anyway, it's quite different from the second quarter in a sense where, the EIR or loan yield that improved in 2Q and 3Q in P&L, but the cash flow, as you show, the cash yield did not improve in the third quarter like second quarter. And actually the fee income, it's not, you may do better Q on Q, but in general, overall, every bank did not see fee performance improve yet in the third quarter. So all in, does this mean that all the banks are continue to reprice upward the yield in the contract that made the EIR higher, but the ability to pay or cash yield has not yet improved as much as 2Q? Am I right to say so? Thank you.
Kun Peach, let me try to recap your question. So the first part of your question was about the loan yield in, I'm sorry, I missed which portfolio that you mentioned?
The overall loan yield of our bank has improved 10 basis point plus Q on Q, right?
Yeah.
But the cash yield did not improve at the same momentum. Compared to the second quarter, both reported yield in P&L or the cash yield has improved on parallel. So what is the reason behind that? Thank you.
Yes, loan yield is a function of our pricing and also the way we adjust the business portfolio mix to capture better yield. So I have explained that we have received positive momentum not only from the rate environment, but also the fact that we tighten our own policy, and also the fact that based on the overall economic recovery, we have positive momentums in terms of the lower impact, milder impact from the debt restructuring. But the cash yield, or I think you refer to the cash payment mix, cash payment ratio in the third quarter, it has declined a little bit from the second quarter. We don't see anything substantial or anything that would be alarming. In fact, it may fluctuate from quarter to quarter, but it probably may be a reflection of, while we have the overall economic recovery in the broader sense, but customers also have some concern in terms of the long-term sentiment from the business environment. So that's why we have some fluctuation in this cash payment ratio. As I mentioned, we'll continue to monitor this. We used to have a much lower ratio during the peak of the pandemic in 2020, and also lower ratio in 2021. The level that we witnessed or we had in the second and the third quarter was still well above the level that we saw in the past 2 years.
All right, the next question is from Kun Cholada BLA. Please ask the question, Kun Cholada.
Hi, can you hear me?
Yes.
Thank you. I'm wondering, can you share how much of the provision is actually management overlay, please?
We don't disclose this specific number, but we can share with you that it is in the high teen level, and it is continue to go up.
Thank you. And I'm not sure if you can say something about the outlook for next year in terms of the global recession and inflation. Would that mean that your credit cost is going to hover around this level, or do you see it picking up next year with a view that the rate is going up as well? Thank you.
We will give specific targets or guidance by the end of this year, for next year by the end of this year. So right now, I don't have a specific targets for you. As I say, credit cost is a dynamic process. It is based on the forward-looking model and also the assessment of our overall loan portfolio. So we believe that on the one hand, there's a risk for economic slowdown, or Dr. Samparin said that the risk for recession is actually quite high on a global basis. But on the other hand, we also have quite a lot of buffer in our balance sheet. So it is something that we have to strike a good balance. And one thing that I think we would like to make sure is that if we are to do, given the high level buffer that we have on our balance sheet already, any additional buffer, should that be the need to build into our balance sheet, we want to make sure that we have the strength to do so, the strength of earnings to do so.
All right, then we have the next question from Kun Peach, UBS once again. Kun Peach?
Thank you, Ka. Just one last question from me regarding the cost related to the restructuring and setup cost. Can you share that from overall estimated setup cost, how much, in terms of percentage of total, how much we have booked already in the first 9 months compared to remaining percentage that we're gonna book in the fourth quarter? And what are other costs that we have to book as well during the fourth quarter? Any other tax or anything? Thank you.
The one-time cost as a result of group restructuring is around 2 to 3 billion baht for the whole year, and we actually have booked quite a lot of them in the first 9 months already. But we don't have the breakdown for you in terms of specific percentage. But you can be certain that we will try to manage our cost to income ratio to be well within our expected range, meaning mid to high 40s. In the second quarter, I actually guided that the cost to income ratio in the second half could be well above 45%, so that the average would be about 45%. But it turned out that in the third quarter, given our effort to try to streamline costs elsewhere to make room for additional costs for SCBX Group restructuring, so we managed to keep the C/I ratio within our targeted range, even for the third quarter on a standalone basis. Did I miss your second question? What's that second question?
And any other tax?
Oh, yes. I'm sorry. Yes.
On the tax
yes.
side.
There will be additional tax leakage from the asset transfer of the unsecured portfolio from the bank to SCBX. You can roughly estimate the unsecured portfolio value is around 100 billion baht. And we already announced that we are going to transfer that on a 8% premium. So 8% premium of the asset multiplied by the tax rate. So that will give you the number.
Okay. All right. We'll move on to the next question from Kun Warawat, Credit Suisse. Kun Warawat? Kun Warawat, are you there? Kun Warawat?
Hello,
okay.
ครับ สวัสดีครับ
ครับ
ค่ะ
Actually, I have the same question that just asked before, right? So, in terms of tax, right? Previously, I thought that we only have one times tax expenses, but it's appear that we gonna have to book like 2 times, right? First will be in Q3 about 2 something billion, and I would say in the end of the year, you basically saying we need to book another tax expenses on the tax line. Is that correct?
That is correct.
Yeah.
What about our original plan is to do the asset and business transfer all at once.
Same time.
At the
Yeah.
same time. So it's just for business reasons and also some technical reasons, we split our asset transfer into 2 tranches. One, which is the majority, altogether 12 companies already done in September. And the next one will be just for Cardex in December.
Okay. So and you also giving a guidance that.
Sorry, I'm.
คุณ
you're
คุณ
fading
วร
away.
วัตร please turn on your mic we cannot hear you
Oh, hello. Yeah. You
Okay.
cannot hear?
yes yes
Okay, sorry about that technical problem. So when you guided the tax expenses, let's say at the end of the year, right? So you're saying from asset that you transfer is about 100 billion, right? So you'll get about 8% premium or 8 billion,
Yes.
right? And you're saying we apply 20% tax on that amount, and that would be it, right? That would be a final number.
Yes, correct.
Oh, okay. So it's okay. So net when you combine these 2 portion together, it will be around. This is another
So it would
1.6
be
billion, right? Yeah.
It will be around 2.5 to 3 billion. Not, it shouldn't be more than 3 billion.
But this one, right? If you're saying 8 billion, right, multiplied it by 20%, is that correct?
Yes.
That's the tax we pay, right? So this is another 1.6 billion, right? And previously you booked like 2.5. So this is like almost 4 billion.
No. We didn't book 2.5 previously, and in the third quarter, the number from the tax burden on the asset transfer was well below that number that you just mentioned.
Oh, okay. So
Because we have to
this,
pay normal tax as well.
Okay, understand. Okay, thank you very much. So very clear. So now you split it into 2 parts. Okay, thank you
Exactly.
very much. Thank you.
Thank you. I have a question here from Kun Thanawat Tisco. And the question is, the Gen 3 business group generated 0 profits, even though this group includes Innovest X, which is believed to be profitable. So who are the drags, and when do you expect those dragging companies to begin to break even or see some positive net profits?
Gen 3 portfolio consists of a number of business. Innovest X is basically a brokerage business, and we are transforming ourselves into a digital assets platform. Innovest X in itself is already a profitable business and with a very good ROE, but we probably need to invest more in order for us to become a leader in digital asset space. And we have very high conviction that we will be able to create a unique advantage, at least in the Thai market. Now, the next business is Robinhood. This is the main drag in terms of earnings for us right now, because we are still in a loss making. But we believe that the value is very much there with our GMV and also our number of users. We have set the path to monetization, and we expect Robinhood to return to break even by the year 2026. And this is purely based on just for the platform business. And with additional business that we are in the pipeline, we have in the pipeline right now. So it should be very much on course to our profitable path over the next 4 to 5 years. Now the other business that we have is SCB 10X. SCB 10X has been generating very positive return on investment. And I believe they will continue to deliver good performance simply because in recent 1 to 2 quarters, the market condition is not on our side. So that's why the investment gain has dropped quite dramatically. But on the overall portfolio, we're still sitting on a very good return on investment. And as I mentioned early on, in the past quarter, it's never about speculative investment, or we also don't have any direct investment in the crypto currencies. So it's always done through digital asset related startups, and that's only a portion of the overall portfolio. So we still continue to expect a healthy return on a medium-term basis for SCB10X. SCB10X is transforming its business model from pure corporate VC fund into a GP model, and discussion is underway right now to talk to our partner to set up the GP model. So they will have additional revenue stream in terms of the management fee coming in. So that will help stabilize the fluctuation in our mark-to-market investment gain or loss. So I hope that will answer your question. Now, when we talk about in our earlier session that we are doing our strategy in 3 phases, so we certainly expect in the near term, over the next 1 to 2 years, the earnings driver will come in more from Gen 2 business, even though many of us may argue that it has become a red ocean. But from our point of view, from the business that we have got right now, we are coming from a very low return business, a very small base. But this is the business, for the Gen 2 business is the business that we basically left behind in the past. But we have the resource, we have the expertise, and we have the people to deliver this business in an effective way. So we believe this will be near-term earnings catalyst for the overall group. But then the exponential growth from Gen 3 business will come at a later stage. But when that happens, it may happen quite dramatically because we believe most of the platform that we have in Gen 3 business will be very valuable in terms of the business that we have built so far, the customer base that we have built so far. So I hope this will give you more color in terms of the business.
All right. Next question. I believe we have a question from Kun Gaurav from JP Morgan. Please ask your question.
Yeah, hi, Kun Manoj. Thanks for the presentation. I just wanted to check one thing. What is the impact of CDR on this quarter's NIM? As in, if you remove the impact of debt restructuring, what would the clean NIM look like?
What's the clean, I'm sorry? NIM, oh, okay. I think the impact is quite minimal because what will impact our NIM from the CDR portfolio is the incremental portion, because what we had in the past has already been reflected in our NIM or EAR, which is forward-looking. So given the fact that the incremental CDR in the third quarter was quite minimal, so the NIM that you saw in the third quarter was very much the NIM that you should expect on a sustainable basis. But on this, let me ask Kun Jiradet to give more color in terms of the CDR portfolio for us.
Yes, as Kun Manoj mentioned, the incremental CDR is quite low than our expectation, which is good news. And the effect of the rate is that overall the CDR plan is to give the lower rate on the fixed basis for the first 2 or 3 years. So that's the way that Kun Manoj mentioned that we already have the effect on the interest rate already. So when the incoming is quite lower than that we expect, it won't affect much on our CDR portfolio.
Got it, thank you. And if I can ask a separate question on AutoX. So you've scaled up to 3 billion worth of loans, which is commendable. But can I check what are the products you're doing? Is it four-wheeler auto title or two-wheeler auto title? And what's the interest rate average there?
It is a title loan, auto title loan business. And the maximum interest rate allowed by the regulatory maximum rate is 24%.
Yes, but I wanted to check what's the average yield on your auto loan or auto title portfolio?
What are the, I'm sorry?
The average yield that you are making on the Auto X portfolio, right?
Okay, it is still early, so it may not be a very good indication, but I can say that it is in a very high teen level.
Got it. And this is both four-wheeler as well as two-wheeler, right?
We are starting right now primarily two-wheelers.
Got it.
Because we are targeting the lower mass segment here.
Right. Got it. Okay, thank you so much.
Thank you. Okay, I believe we have a question from คุณณัฐพล CGS CIMB Securities คุณณัฐพล
Can you hear me?
Yes.
Thank you very much. A few questions for me. Number one, about your CDR loan. Just would like about how much from SME, retail, and corporate. Could you give some breakdown on that?
Mostly, I think the mainstream is come from the corporate, especially on the hotels. It's about the 100 billions, I think.
Yes.
And
sorry, I think I can't hear you well.
Yeah.
Could you speak louder?
100 billion is come from the corporate, and another 100 billion is come from the retails, and the rest is SME.
Yes.
So let me recap. Around 100 billion from corporate, 100 billion from retail, and the remaining from the SME.
Right.
Is that correct?
Right.
Yes.
Thank you.
Thank you.
ครับ
Okay, next question. Can you please elaborate more about the bank's strategy? Is this the question? Hang on. Is this the question?
Yeah, I think, yeah.
This is the question, right? Under the Better Bank.
Yes. So
yeah.
the question is, please elaborate more about the bank's strategy under the Better Bank strategy.
Okay.
I think so. So the question is about how do we continue with the Better Bank strategy? I think for this question, shall I ask Kun Chris, our CEO for SCB Bank, to give a response to this question? Kun Chris, are you still online? Would you please take this question?
Absolutely. Can you hear me?
Yes.
Yes.
Okay, good. So thanks for the question. In terms of being a better bank, we would I think first continue to optimize the business portfolio and grow it prudently. Second, we would be increasing digitization within the bank. Third, we would be focusing on fee income, more from wealth and insurance-related fees from our strategic partners. Fourth, we would aim to reduce our cost-to-income ratio, hopefully within the next couple of years down to the 30 level mark. And last but not least, we will be maintaining a solid capital CET1 ratio at around 15% upwards. I think what we will see more pronouncedly in the Better Bank strategy will be the three areas we want to double down. First, I think you will see our pronounced focus on our wealth management strategy with the aim to be known as the best wealth banking in Thailand by holistically and digitally helping our customer to grow and sustain their wealth so that it can be passed on to generation and generation. Ensuring that we provide seamless experience, whether it's onboarding, grooming, nurturing, and graduating them upwards from each segment throughout their life stages. Second, I think you will see that we will be connecting the dots via our relentless execution to become truly omni, holistically addressing our customer needs, pain points in both sales and service, and turning every touch point into positive engagement, better serving our clients, and gaining that longer term trust. Last but not least, we are aiming to become a truly digital bank without fear of any digital attacker or disruption. I'm saying this in the spirit, not that we will be competing in the mass and below segments, but future-proofing our play within the upper mass and ultra-high net worth segments. I believe it is this laser focus on that will ensure SCB Bank remains a key pillar in the SCBX story. Thank you for your question.
Thank you very much. Thank you. Okay, we'll move on to the next question from Kun Rawisara, FSSIA Financier. I see that you have less aggressive expansion into the auto loan portfolio. Do you see any concern in the auto loan industry, or do you think the risk return of this segment is not that attractive for you?
I think we suffer a little bit in terms of the auto loan business portfolio. We probably may need to fine-tune the strategy for this segment. I think one area that we have discussed is that probably we maybe to focus on certain brands. In fact, we should have better diversification in terms of the brand that we want to associate with, and also the customer base. So right now, we are formulating the strategy to tackle this issue, and also the mix between new car and used car and what we call my car my cash, in order to drive the optimum portfolio results. But the larger portion of our retail portfolio is actually mortgage, which has continued to be perform quite well, and the demand for mortgage market has been quite resilient, and our customer base or customer segmentations have been quite strong.
All right, thank you. Just to follow up on that issue, there's a question here asking about the new loan growth at AutoX. Now it looked impressive. Can you please share the financial performance of this unit, such as the average loan yield, and what is it that you expect of credit cost at this unit?
I think for this question, we're going to have an online session with the management of AutoX. I would encourage you to sign up for that session, which is going to be on the next Tuesday. You will learn a lot more from the session through direct interaction with our management. We can share with you some data point, but simply because right now we are only in the third or fourth months of the business. I mentioned that our loan yield is in a high teen, which is quite positive, but nonetheless, that's only the starting point. Certainly, we believe this will be a very profitable business, and we have a very seasoned and veteran management to take care of this business.
All right. Next question is from Kun Natapon, CGS CIMB Securities. The question is, may I ask about your strategy to expand retail mortgage and auto HP for next year?
The mortgage portfolio for us has been quite solid and resilient. Our strategy has been to focus on the high-end premium segment. We mainly focus on the top 5, top 6 developers in the country, and also we make sure that the customers that we onboard for the mortgage portfolio are resilient customers. So I think that's the quality that we want to focus on for the mortgage portfolio, and we will continue to build on this strategy. We probably will want to do more in terms of the digital channel for mortgage. It is not easy, a mortgage always involve some human element for the business in the process. But overall strategy that Kun Chris just mentioned, 3 areas that Kun Chris said that we will need to double down. Is one of them is digital banking, and digital banking is not only just digital loan or digital personal loan. It will also mean that we want to do business like mortgage business increasingly more through digital channel. So that's the way forward for us. In terms of the auto high purchase, I mentioned in the previous question already that we are looking at a new formula or to fine-tune our strategy for the auto hire purchase. We suffer a little bit of the high NPL from this segment, but nonetheless, in terms of the impact to the overall portfolio, is quite minimum. But yes, we want to make sure that we have the right strategy going forward for the auto hire purchase business.
Thank you very much. I believe we have covered all the questions, so thank you so much for every question, and thank you to the executives for answering them as well. I hope that you find this session beneficial for you, and thank you very much once again for joining today's event. Have a wonderful evening. ขอบคุณค่ะ สวัสดีค่ะ